Good evening. Ira Epstein with your Spider ETF market wrap-up, and this wrap-up is for Monday, and we're sitting here now at the 14th of November, 2022. Well, interesting day, more or less a consolidation day, I think is the way to call it. Had a bunch of Fed members, Mr. Waller and Ms. Brainerd, speak. Mr. Waller yesterday, Ms. Brainerd today. Let's get to that in a minute. I want to remind everybody that my special report on the dollar index is on the website, and it goes off the website sometime tomorrow. I don't know if it's late at night, but it goes off. So if you want to see this, now is the time. And to do it, you can just take your cursor, move to the top here, and you will see an icon appear. Just give that a click, sign up, and away you go for that. It is time sensitive. It covers both the weekly, the daily charts. I'm going to give you a 30-year what the market has done historically at this time of the year, the 15, the 5, and our own proprietary price counts. Wrap it up together, give you a trading idea with it. In addition, ideas where to maybe make some moves on it, and away you go from there. If you have questions at all, you can always go to our website, but the smartest thing up here, and our website's iraepstein.com. It'll be under research as well. So let's go to the market and talk about what took place. Over the weekend, Fed Governor Waller and today, Ms. Lael Brainerd, the Fed Vice Chair, pretty much echoing what I said in my weekly reviews for you. I think the whole question is, what are you defining as a pivot? If you think a pivot is, hey, you pivoted from 25 basis points to go to 50, 50 to 75, 75 back to 50, 50 to 25. I'm not going to argue that. But I don't think that's what the market, big money, bets on for a pivot. A pivot's either you keep interest rates increasing or you don't. That, to me, is the real pivot. Could there be two? Of course there could. But what I liked was the word encouraging from Ms. Brainerd when she was saying that, yes, these reports that came out on CPI, the headline and the core, very encouraging. PCE, one of their favorites. They're going to be looking at that real hard when that comes out again. And it helps that you're getting, be it tech firm after tech firm, Amazon today joining the foray into how many people can you lay off, and they're laying off 10,000. Now, that doesn't mean there aren't hirings going on. You know it. Brick and mortar stores always hire in November for the Christmas rush. They have to train the people, get their temps in place, do such. You're always doing a certain amount of hiring, be it UPS, FedEx. There's places that have to service. The degree and the amount they're hiring is probably not like they did in prior years. That's what we have to keep our eyes on. DraftKings, haven't covered this, so I figured, hey, it's a good time to do it. The first glaring problem that I see on the chart is you had a gap, the market went up and filled it. That's not a sign of strength. Gaps on charts, you had one here, generally get filled. They don't always, okay? You had to come back after a while to fill these gaps by coming up there. It takes time. But they generally get filled. That's what chartists will tell you. If you leave a gap and get two of them, you could have breakaway gaps up or down. You can get island formations. You're always looking at what they are. The other thing I look at, the trend has been up recently, higher lows, higher highs. The market is over the 18-day average of closes, and the next main moving average is the 100, ran into that there. I would think that you had a bear market rally up till you hit the 18, and that was 2 days ago. Now you extended it. Now the Bollinger Band's way up there. Can the market keep going higher? It could, but it's not likely because it filled that gap and it ran to the 100-day. Is there a reason to be bearish? No. It's not what it's saying. It is saying, hey, if you're inclined, you're a buyer at 1403, but your stop's going to be all the way down here under 1140. To me, that seems like a big risk on this stock. I don't think that you'd have to risk that kind of money in it. Momentum is up, not overbought. Trend up, bias up, first objective, and you have two higher ones if the market keeps going. In the lithium and battery tech ETF, LIT, you got up and you're falling back into the support combination of the 100 and the 200-day average. You're still overbought. You have not embedded. I think the pros are taking money off the table. In Apple, a nice rally, but is it going to be able to hold anything? I think it went up with the general market, but I don't think it's taken over leadership of any type within the tech sector at this point. Could it go higher? Of course. Why not the 100-day average? If it peaks here, support starts at the 18-day average, and you're nowhere near getting a bearish pattern out of that. Disney is a bear market bounce, no more than that. You're correcting an oversold condition. You're still with lower highs, lower lows, lots of selling resistance above the market towards the 110 level. I think a lot of people are disenchanted with this company. Notice the word enchanted. XLF, market got up to the upper Bollinger Band. It's embedded on breaks until the red line closes. It's under 79. I think the market will continue to find buying on these breaks. Why? Because the question is, what's the spread between the short-term money and the long-term? Now, this could get a little nasty down the road. Think of this. If the Fed's getting closer to ending things, their rate hikes will affect the 2, the 6, the 2-month, the 6-month, the 1 year, up to the 2-year trade instruments. But the 10 and the 20 should eventually, if they're really through, start rolling into a different pattern here where they start losing yield compared to the front. And the curve yield probably moves out even more. Something I'd be looking at making those trade decisions. XLI trying all of a sudden to pull back here, outside day down. It's had a heck of a rally, supports all the way back through here. It does have the embedded reading. If you get a reading under 79 in the slow stochastic, it would tell me you're coming to these numbers. Barring that, I do look for the first break in a bunch of these markets that are embedded to have support on the first break tomorrow. Keep your eye on it. Let's see if they do that. In the semiconductor, wasn't this the market that was no good? And suddenly look at how that thing has picked up. Now, NVIDIA is still being left behind. Intel's got problems compared to AMD. I'm watching how the analysts are coming out and ranking the different companies. Here's my ranking. I would never have a client buy over a Bollinger Band. I'd be telling them on this first challenge of the 200-day average, it's great. It's called your Christmas gift. Leave. Leave the room. Get out. Not that I'm bearish. I think you'll be able to come back in at a better price. In the home builders, okay. So they have come up rather dramatically into the combination that I call lethal. The combination of the 200-day average in gray and the upper Bollinger Band. Another gift. Is housing improving? Not really. Ms. Brainerd today was talking about housing prices. And she goes, yes, they're up another 2%. But these are the slowest gains on a month by month that we've seen in a couple of years. So soon it's going to be negative. It's going to cross back under, and some of the houses in some of the areas will start actually losing value. We know the West Coast is seeing housing prices drop. The question is, who gets left standing as the market falls a bit here? In the energy sector, as far as I'm concerned, you hit the Bollinger Band for the first time. So long. That's what I say to the trade. Love you. It was great. OPEC came out today. They said that demand is falling still. The increase of the amount of barrels you're going to need, they keep looking. And while it's increasing, it's decreasing at a percentage rate. It's a code word. It means they're looking to do production cuts to balance the market, to keep prices high so that the tax on you to give them the money goes there. It is the Biden administration that created that. We could have had a different play. Doesn't matter. Look at what the Biden administration did with the inflation readings, with the energy policy. They won. They won the Senate. Yep, they won, and they may very well get the House. Who the heck knows? These votes are still being cut, but they won anyways, the House. Why? The majority, if the Republicans get it, is so small, any little crossover does it. We've got to say that. What's tomorrow? Supposedly, Ex-President Trump is going to announce his presidency, supposedly. You never know with this man, but he's getting a lot of blame because his candidates did poorly. That's the thing. By the way, the Herschel Walker contest is still very important. You want to keep the Senate split. You don't want it to go 51-49, game over. They'll gang up and then get anything they want through. So at first I thought people will yank money from it. Nah, there's going to be a lot of money in that contest. Put at it. GLD fighting a big battle over the upper Bollinger Band, but you don't buy that many days in a row over a Bollinger Band. It's rare that you get beyond 5 and you're there. 1, 2, 3, 4, 5. So I'm looking for a pullback to happen at any moment right now. Silver, I'm expecting the battleground is the 200-day average up to the upper Bollinger Band. It is embedded, but the first challenge of a 200-day average generally doesn't end well. Generally, when you're coming up and you fight that, it tries to fall back under it. It's the second and third that look a lot better. And in copper, I think you're at an important resistance point at the 200-day average in that as well. TLT, well, here's the argument. This market is not adding yield, and that's why you're coming up in this market at this point. UUP continues to fall down. That's the dollar index. Could it be headed to the 28 level? It is oversold. So selling an oversold market at the Bollinger Band, not healthy for you, but the trajectory of the market remains down as it remains up in FXE. So I appreciate you watching. Take a look at the currency report. Tomorrow we'll talk about you coming into the webinar this coming Thursday. And you want to attend these because as we get into December, I won't be doing as many during the holiday. So you get another 2 of these that really you can ask a lot of questions, so I want you in them. I don't record them and post them on the website. You'll have to attend live to view it. I'm Ira. You have a great day. I'll see you all tomorrow.